Welcome to the Social Security Nerds podcast. I'm Mike Hayflick with my partner, Russ Geiser. Together, we have embraced the complexity of Social Security claiming strategies and retirement income planning so you don't have to. Today, Russ, we're going to talk about this thing called an annual earnings limit. We just refer to it as an earnings limit. Now, this earnings limit, it applies to people who decide to take Social Security benefits before reaching what would be called your full retirement age. And we'll get into this in detail. That means that upon reaching full retirement age, you're no longer subject to this earnings test. So if you know what your FRA is, or full retirement age, after that, no worries about this, okay? This doesn't apply to you any longer. But it's about taking benefits before you've reached full retirement age and then thinking that you can earn some kind of income. First, Russ, probably let's talk a little bit about what is earned income in this case.
Right. So earned income is really W-2 income. So, you go to work, you get paid, but it's gross income though. So even though your W-2 wouldn't reflect if you contributed to, let's say, a 401k plan pre-tax, the gross income counts. So you can't evade or reduce your income by contributing to a 401k plan. It's truly your gross income that's earned. So income from, other investments, that doesn't count. Distributions from a Roth IRA or a traditional IRA don't count.
Pensions
don't count.
Defined benefits, right? Pensions that you earned where you get a monthly payment.
Right.
We like to say, we don't mean you didn't earn your pension. We just mean it isn't part of the earnings test as far as this goes.
That's right. So that's a nice thing. But why would someone ever consider claiming their benefit while they're still working? And we would agree, if you're not working, then you can really, truly consider, is it the right time to claim?
Mm-hmm.
But I think there's a few reasons why people consider claiming while they're still working. And I think one of those reasons is I want to get it while it's there.
Right.
Okay.
Right.
So we want to get it while it's there. Maybe I can take that even if I don't need it. I can invest it and I can do better than the Social Security system in terms of returns. Or maybe I want to pay down some debt while I'm getting closer to retirement, or help a child through school, or just have extra spending money. Whatever the case might be, though, we have to talk about the earnings test and how this would apply.
Yeah, and those are all very good notions, by the way. So we would probably agree, wow, it would really be nice to be able to do some of the things that Russ just mentioned, but it can be circumvented, and this is how. So we're going to take a really easy example first. Let's imagine someone is about to turn 62, which is the typical earliest age that you can take Social Security benefits. We don't usually talk too much about the Social Security disability type cases, but of course you could get Social Security earlier if you've been approved. Widows can also get benefits earlier, as early as 60 and even 50 if disabled. We're just talking about normal circumstances, the range between age 62 and 70.
Right.
So someone turns 62, and we won't do this right to the dollars as an example that you might see in a workshop we do, but let's just go like this. So let's say someone is making $60,000 a year working. January, they say, boy, this is enticing. I've got this invitation to take Social Security. We always say it's not an obligation, but the invitation, it really is attractive for many reasons Russ went through. Pay down debt, maybe help your kids with student loans, maybe invest the money, just save it. What happens, though, is Social Security, and this is for 2024, says you can only make $22,320 in an earned income fashion. Again, gross W-2 wages, or if you're self-employed income net of any expenses that you're able to write off or deduct. So what happens, though, is you're making $60,000 in your full-time job. $22,320 is the limit. You're far and away above the earnings limit. And what happens is, for every $2 that you went over that limit, Social Security calculates that you will then be forfeited $1. Now, in my example, Russ, you're over by 38 grand, let's say. You have to forfeit $19,000 of what you thought you'd be getting. Now, to keep it simple, if you thought you were going to get $1,500 a month, that's 18,000 for the whole year. You're getting nothing the entire year. You thought you were going to get paid Social Security benefits.
That's right. And I guess when you think about how does this actually work, if you were to file for your benefits, and when you file in the application process, there is the government will ask you, are you planning on working and how much are you planning on making? And when they do that, if you tell them exactly what you'll be making, like in this instance, you're going to be working and then they will actually withhold proactively those checks.
Right.
And even if they're withholding only $1, they withhold a whole month of benefits because your benefit ends up being recalculated, and they do it by months. It must just be for accounting purposes to make it easy on the system. So that is the best case scenario, I guess, for withholding.
Sure.
Like maybe about this rule and you'll get something even though you're working, and so you forfeit those checks. But what we've seen happen, and this can be an ugly surprise, is that someone might not realize they're going to continue working perhaps, or they just don't know, or they don't accurately fill out the application. And once tax time comes, because they haven't had anything withheld, then the IRS and the Social Security systems true up. And now all of a sudden there's a debt owed to the government because they've exceeded the earnings limit. And we had talked about they've changed how they collect that now, but still, you still owe that money back. To the government. So.
I think as the government often will do, they'll say, wow, we've got problems. People aren't understanding this very well. What are we going to do about the remedy to that? Instead of just better education about it, maybe better information when people are ready to claim, they decide, well, they're still going to get into trouble. Let's just relieve them of some of the, the pain upon owing us back money that they weren't supposed to be paid. Administratively, it just is a mess. It's a nightmare to get letters from Social Security. It's a very antiquated system. The people there are wonderful people. I'm not trying to disparage agents that work for Social Security Administration, but as we've often said, they're not supposed to give you advice. So if you just think they're asking you, are you going to work while you're taking Social Security, and you think it's just a matter of the agent being interested in you, it's a very meaningful question. And the answer can really, I think, surprise the outcome, right? Either you'll be fine or you're going to be forfeited money because you're making too much in a job. Russ, let's talk a little bit about a case where, let's say that person who could claim in January, they turn 62 in January, they're ready to claim. Let's say they wait until like July. And they say, well, I won't take in the first 6 months of the year. I want to take my benefits starting in July.
Right. So, there's an annual earnings limit. But basically what happens is the money that you made, for the first 6 months in your example, Mike, it doesn't count towards that. Meaning you're going to decide to start your benefit halfway through the year. So moving forward is how they'll assess if you are hitting the earnings limit or not. And they do that by a monthly income. So that $22,320 per year is $1,860 per month. So if you're not grossing more than that per month moving forward, you won't have anything withheld specifically. You would not reach that earnings limit.
I want to say this. I think that some people think if I work at all, I can't take Social Security, right? A very broad, kind of a very general statement. And that's not true. You just have to stay under the limits that have been kind of imposed through this rule. I want to give you a quick example of two examples. One example is a widow who might work part-time. They were told, oh, because you work, you can't take Social Security. You can't make income while you also take a Social Security benefit. And I've had this happen where they actually were able to claim a spousal. It was actually a deceased spouse's benefit at a smaller level than what her own benefit would be someday, and take it and know she's going to be forfeited for the first 4 months of the year. But then the additional 8 months, she actually got paid. It was game changing for her in her life. She said, wait, so 4 months I won't get it, but 8 months I will? That was amazing to her. And then, of course, later she decided she will switch to her larger own benefit. The other example where it can work is people that do have pensions, they might be in jobs like being a registered nurse, for instance. God love healthcare professionals, right? On their feet, sometimes 12 and 16 hours or more a day. And at some point, they say, I just can't keep up this pace. I want to retire. I'm going to get a pension, but I think I want to stay in the job a little longer, but maybe on a part-time or per diem basis. They can take a Social Security income benefit. It's reduced, but that's fine. We've worked through that. It still makes sense. And then they can work per diem and almost calculate to that 1860 a month, Russ, that you mentioned, and then also get their pension. So I say you can kind of have it all, but boy, does it help if you know the rules ahead of time.
If you have questions about this stuff throughout the week, look down the numbers on the screen below, 716-362-7099. You can text or call us there. We're happy to answer any questions you have, or visit us for more information at incomeplanhq.com.
Yep.
And no, that's a really good point. Now, we did mention, though, that this applies to you when you've not yet reached your full retirement age.
Mm-hmm.
Okay. So you have to understand what your full retirement age is, and that's dictated by the year you were born. And basically, if you were born in 1960 or later, age 67 is your full retirement age.
Right.
If you were born between 1954 and 1960, your full retirement age was 66 and 2, 4, 6, 8, and 10 months, depending on that year of birth. So to keep the things easy for this example, let's use age 67. You're born 1960 or later. If you claim your benefit early before and the earnings limit test applies, once you're in the calendar year that you attain your full retirement age, so January 1st ticks the new year, and you turn at some point in that calendar year your full retirement age, the earnings limit test changes, and it changes, at least for the year 2024, $59,520 is the new limit. And then the other difference is if you do exceed that, for every $3 over, they reduce your benefit by $1.
Right.
Okay. So that's now $4,960 per month that you can earn without having any sort of reduction to your benefit.
That's exactly right. So for me, at the time I will turn 67, I'm a March birthday. So let's say I want to claim for January. As a 66 and 10-month-old and a 66 and 11-month-old, January, February of that year, I just have to stay under that $4,960 per month. Soon as I turn 67 in that March, I can make whatever I want. If I have great consulting opportunities, if I want to keep making a fortune, I can. Millions a year if I want in income, and there's no more earnings limit. Right. So effectively, Russ, this is essentially like about meeting an expectation you might have, right? A cash flow expectation. Again, a lot of people will claim Social Security early. Let's say at 62, thinking what you said earlier, Russ. Oh, I got to get the money out of that fund while it's there. Fear, right? The media scares the daylights out of all of us.
We did our last podcast on this, by the way.
We did actually. So they want to take it. They also think, I'm just going to take it and save it. I'll create a separate account, maybe even an investment account, and invest the money, right? Again, maybe a good notion, but this earnings limit test can completely circumvent that. But the thing about this is, we don't believe break-even analysis either is the way to claim your benefits. Break-even analysis, Russ, just give our audience kind of an idea of what that is.
Yeah, most people, I would say in our industry, really look at it this way too. It's, okay, I'm trying to figure out when I should claim my benefit. So how long do I need to live if I basically start collecting at 62 to make it make sense, right? Like, I don't know when I'll die. That's part of the problem. Versus claiming at a later age, right? How long do I have to live to make it make sense to claim later, right? How many extra years do I have to live to make up those dollars I'd be giving up by waiting, essentially? And that's only part of the equation. We're not talking about spousal benefits or even how much money you need for retirement or anything like tax efficiency. Right. There's no planning done with this. This is simply just figuring out. Really, I mean, there's really no data points. You don't know when you're going to die, and we haven't done any financial planning in this regard. So we see it can be short-sighted. And then there's also the earnings limit test on top of that.
Mhm.
And you have to think about all of that. So we
Definitely.
try to help people with information. It's a paradigm shift. When do we claim our benefit that makes the most sense for our household with all of the other financial parameters
Mhm.
that we have?
Mhm.
How much we want to spend in retirement, what our retirement assets look like, how much did we save, what our pensions look like, what our social security benefits look like, what your marital status is, what your legacy goals are. All of this matters. And if we're simply looking at break even, we're really, really not looking at the whole picture.
Absolutely not. This comes down to folks planning a retirement that costs you the least, right? Costs you the least. It's not so much about watching your investments and the annual return you're now getting once you've retired. It's about how can I use the least amount of that capital that you've accumulated in conjunction with a really proper and solid Social Security claiming decision, and then maybe with other income sources also factored in. How can you use the least amount of your capital and retire comfortably, reliably, with low anxiety, low stress?
Right. And that's what we're all about. It's all about getting to that solution in the most tax efficient and probable way possible, like the best use of the largest income benefit you likely have. Not so much how much do you get out of it, but how do you actually prosper from it in the best way possible.
That's right. As I said earlier, Russ and I, we've really embraced the complexity of this decision making, of the rules and of the strategies that you're allowed through Social Security income. So we appreciate you tuning in. For all of the work we do, please subscribe to our YouTube channel,
Social Security Nerds.
There you go, where you'll find all of our video content. You can visit us and contact us through our website, incomeplanhq.com. Thanks for joining us, and we'll see you again next week.
Thanks for tuning in. See you next week.